I mean, in the early days, you have no idea how many people used to go there because it was an adventure. It was a real outing. They had the shows. They had the Super Bowl. They had the entertainment center. At the weekend, it would be like lemmings, piles and piles of people going down the stairs and then going all around the casino because they really, most of them had never seen anything like it.
Under apartheid, casinos were banned inside South Africa's borders but tolerated in the so-called independent homelands. Sun City became the most famous example, a resort where South African law technically didn't apply, but South African money poured in freely. The contradiction was never really resolved, it was just institutionalized. After 1994, the National Gambling Act tried to fix this. Provincial gambling boards were created. Licensing regimes were established for casinos, bookmakers, and limited payout machines. The philosophy was pragmatic: bring gambling into the open, regulate it, tax it, and contain the harm. The law rested on three assumptions: that gambling happened in identifiable spaces, that operators controlled the full experience, and that money moved slowly enough to be monitored. Those assumptions were reasonable in 2004. They are not reasonable now.
So the guys would come in, sit at a table, open their wallets, give you 500 Rand, count out on the table in fives so you can see 25, 50. Visibly, you can see and identify how much money it is. And you've got the cameras watching it as well. So the inspector would watch it, make sure that the right amount of chips were passed out to equivalent to the money on the table. Check, check, push it across.
South Africa generated 59.3 billion Rand in gross gambling revenue in the 2023-24 financial year. That is the legal market, the regulated one, the one with licenses, audits, and tax receipts. Now consider this. YieldSec, the intelligence firm that tracks illegal gambling markets, estimates that illegal operators pulled in 72.2 billion Rand in gross gambling revenue in 2024 alone, against the legal market of 33.4 billion Rand online. So in the online segment, where growth is fastest and oversight is weakest, illegal gambling is more than double the size of the legal market.
Our province accounted for about 26.8% of national turnover in terms of just gambling revenue, and about 30% of the national pot of the gambling taxes that are collected by provinces are from our province, our provincial taxes and levies. So we make up about 30% of the taxes and levies that we collect. And when you look at online sports betting, out of the 23 billion that you've mentioned, about just over 19 billion is online sports betting. So by far, online sports betting is the biggest component. And I just have to make sure that those who are listening understand that online betting or online sports betting and online gambling is very different. So online sports betting is legal and online gambling is illegal.
To understand why the current system struggles to see illegal gambling, you need to understand what the system was built to see. For most of the 20th century, gambling had walls, physical ones. You went somewhere, a casino, a betting shop, a racecourse. Money changed hands in person. Staff watched, cameras recorded. Transactions were visible because they happened in identifiable spaces.
In those days, it was quite informal because bear in mind that there was a lot of tipping on the tables. So if you won 500 Rand, you'd give the dealer 10 Rand and they'd put it in the tip box. And they would actually bet for you. So now you can imagine that the staff are quite excited about this. They wanted the punters to win because then they would get more tips. And that whole relationship changed quite a lot when they stopped tipping.
What technology did was remove friction, one layer at a time. Travel was no longer required. Then cash was no longer required. Then waiting was no longer required. When broadband improved and smartphones became ubiquitous, the lost barriers disappeared. Betting became continuous. Sports betting turned every match into a live market with micro bets on the next goal, the next point, the next foul. The decision cycle compressed from days to mere seconds.
We always say in the gambling industry and in the sector, there's different psychologies also for how people play, where people play, and so on. So people who go to casinos don't necessarily have the same gambling psychology that people who bet online do. And we saw that sharp rise, especially after COVID, because people weren't able to go anywhere. So the pub that you might have gone to normally, or the casino that you might have gone to normally, that wasn't an option for you during COVID. So we saw a rapid rise of online sports betting.
Deloitte's 2025 report on South Africa's rise in gambling phenomenon found that the country ranks amongst the highest in Africa for gambling participation rates, with online betting growing at double digits year on year. That growth is not evenly distributed. It's concentrated among younger adults, lower income households, and communities with high smartphone penetration and limited alternative financial services. The profile of the problem gambler has shifted. It's no longer a caricature of compulsion. It's a working adult with income, a credit record, and a phone whose financial collapse takes longer to notice and is therefore easier to exploit. Clinical psychologists working in this space note that online platforms accelerate addiction because they have removed the natural friction points. You no longer need transport, no longer need physical proximity to a venue, you no longer need to interact with another person. Gambling is a click away at 2 a.m., and the platform is designed to keep you there.
Compare going to Monte Carlo. And you've seen it on James Bond, and I mean, it really is like that. And it's so dignified, and so you've got the interaction, and you've got the genuineness of it. You know that the odds are slightly against you, but you take a chance because that's what you're there for. To a lot of people, it doesn't matter whether you win or lose. To a lot of people, it really, really does. And unfortunately, those are the sort of people that have no control. They never know when to stop, which is what I love about this online thing that they're advertising. You see some of the famous celebrities' wives and husbands going on there. Real winners know when to stop. No, they don't. Yeah. They really, really don't.
According to the South African Bookmakers Association, roughly 27% of South Africans, that's 16.3 million people, interacted with an illegal gambling platform in 2024-25. The SABA CEO, Sean Coleman, put the financial impact plainly. Illegal operators are diverting over 50 billion rand offshore every year. That money does not pay tax, it does not employ South Africans, it does not even fund public services, it just leaves. Now, here's something that should concern everyone in this industry. Between 2018 and 2023, South African authorities identified just 285 cases of illegal gambling. Against a backdrop of thousands of active operators and billions in annual extraction, that enforcement rate is not a gap. It's a mismatch so wide it's become structural. Think about what an illegal gambling transaction looks like from a bank's perspective. A customer makes a deposit to what appears to be a generic online merchant. The amount is modest, maybe a few $100. The frequency is consistent with normal customer behavior. The merchant category is misclassified intentionally to avoid triggering gambling-related scrutiny. Nothing flags. This is not an accident. The Amapungane Center for Investigative Journalism documented in detail how illegal gambling facilitators deliberately structure payment flows to prevent banks from identifying gambling activity at the point of transaction. Payment processors are used as an abstraction layer. Shell merchants and proxy entities are rotated to avoid pattern detection. When pressure builds in one area, operators move, domains are mirrored, payment routes shift, marketing affiliates pivot. The infrastructure is modular by design, so that no single takedown collapses the whole operation.
Legislation and regulation has not been able to keep up with the pace of the increase in online sports betting. But because the average person on the ground doesn't necessarily understand the difference between online sports betting and online gambling, they don't necessarily understand which platforms are legit and which ones are not, they don't really distinguish. So for us, what is important as legislators and regulators is making sure that we actually legalize online gambling, because you can't tax what is illegal, and you need to be able to regulate it in order to protect people. So that is why legislation is also so important.
There is even a name for one of the core techniques: bin sponsorship abuse. Illegal operators gain access to payment card infrastructure through sponsored bank identification numbers, essentially renting legitimacy from a regulated entity. They use this to process gambling transactions that the card network and the issuing bank never identify as gambling at all. It's not a hack. It's an exploitation of how the payment system was built to trust its own participants. Then there's the velocity problem. Traditional AML frameworks rely on thresholds, large amounts, sudden spikes, transactions inconsistent with the customer's profile. Illegal online gambling defeats this through volume and frequency, not magnitude. Hundreds of microbets replace a handful of large wagers. Each transaction is unremarkable. The aggregate is significant though. But fragmented systems are built to see individual transactions and not trajectories. And by the time a compliance team has aggregated enough data to see the pattern, weeks of activity have already cleared. The Port Tapper versus Casino Association of South Africa case, decided by the Supreme Court of Appeal, exposes the jurisdictional dimension of this. The court found that bookmakers cannot legally offer fixed odds bets on casino games like roulette. What the case also confirmed, incidentally, is that certain gambling content, including roulette streams sourced from jurisdictions like Lithuania, falls beyond the effective reach of South African provincial regulators.
So when I look at our gross gambling revenue, when I look at the taxation that it brings in, I very much believe that our mandate as a province, as a provincial treasury, is our main mandates are twofold. We need to protect the provincial fiscus, and we need to protect our residents against the harm of an industry you chose to enter. It's a business decision. You chose to enter it. So we need to balance that. And we do that through legislation, through regulation. And of course, we want economic growth, we want job creation, but not at every cost. And we also need to make sure that with this rise in online sports betting, with the rise in online gambling, which is illegal, that part, is that what are the gaps that people not doing the right thing are seeing in order to maybe move money in an illicit way, money laundering, and to do things that they're not supposed to be doing.
Servers offshore, content delivered digitally, money deposited locally, then routed out. Provincial gambling boards have no authority over the delivery mechanism. Financial regulators see the payment. Communications authorities see the advertisement. No single regulator sees the full flow. Parliamentary debate has acknowledged this for years. Members of Parliament have repeatedly raised the inability of existing institutions to distinguish licensed from unlicensed operators at the point of transaction, or to intervene meaningfully once funds have crossed the borders. The language in those debates is telling. The concern is real, the mechanics are understood in broad terms, but by the time enforcement is initiated, operators have already restructured. Platforms shut down one domain and reappear under another within days. The cost of adaptation for the operator is negligible. The cost of investigation for the regulator, however, is months of work.
The fact that we have that visibility gap it's a problem. And if we want to really deal with things like money laundering, then we need to be able to see everything. We need to see, where does the money come from? Where's the money going? Who's the money going to? Why is the money going there? We need to be able to see all of those parts. And like I said earlier, that you don't have all of the answers, and it's really hard. Something I asked my team, and even us, we don't have the answer yet. Hopefully we will eventually. But the question I asked is, okay, given that we are currently reforming legislation, we must acknowledge the fact that by the time we implement the legislation, the industry would have moved even forward. So how do you legislate and regulate for that which has not yet been created? It's like AI is moving at an astronomical pace. So what are those type of things in innovation, in AI, in digital technologies, in automation that we need to consider? I mean, yes, our board in terms of digitization and automation is making sure that, that all of our applications are online. We are exploring through our board how we can use AI and how we can use digital technologies in order to really close some of that visibility gap, and also to help us with enforcement. But it is hard. And I think this is also why it's so important for DTIC to bring that legislation on illegal online gambling, and also the other offerings where we need to make sure that we really tighten our regulatory and legislative space and the gaps in that.
Illegal online gambling survives not because it's invisible, but because it looks operationally normal inside fragmented financial systems. The transactions clear, the platforms function, and the money moves, nothing announces itself as a crime. The system registers volume, but not intent. It measures transactions, not trajectories. And by the time intent becomes legible, the money is already gone. This is the part that matters most for compliance professionals, for banks, and for payment providers, because this is where the risk lands on your desk. The National Gambling Board's own research makes a deeply uncomfortable point. Enforcement does not fail because illegal activity is hidden. It fails because illegal activity looks statistically ordinary while it is happening. The platforms adapted to this. User interfaces were streamlined to reduce the steps between impulse and action. Algorithms personalized offers based on behavior. Notifications kept users re-engaged. The system learned how each user responded to risk and used that to deepen the exposure. And then gambling stopped being one operator's closed loop. It became a stack. Data providers, odds compilers, streaming partners, payment gateways, identity tools, each layer operated by a different company, frequently in a different country following its own rules. No single entity could see, or was required to see rather, the full picture. This is where the regulatory framework stopped keeping up. Provincial boards licensed premises, not platforms. Laws defined categories, casino, bookmaker, lottery, even as platforms blurred those categories beyond recognition. Jurisdictions stopped at borders that technology simply ignored. The economics reinforced the problem. According to MoneyWeb's reporting, the cost of running an illegal gambling operation remains low relative to the profits extracted. Penalties rarely match the scale of harm. The perverse result is a stable equilibrium. Illegal gambling remains highly profitable, enforcement remains episodic and under-resourced, and operators have every incentive to persist. Now, let's talk about what happens when that 50 billion rand a year leaves the country. Some of it is straightforward revenue extraction, consumers spending money offshore that would otherwise circulate domestically. But a portion of it is something more deliberate. Gambling platforms used as a conduit for money laundering. Gambling is structurally attractive to criminal finance for one core reason. It converts unexplainable money into explainable money. A deposit becomes a stake becomes a payout becomes income. Losses are expected, and that's the cover. Wins are legitimized by the structure of the game. And when you run this at volume, using many small bets rather than a few large ones, no single transaction stands out. The Amabungane investigation is explicit about this. Criminal networks do not use gambling platforms as a one-off laundering mechanism. They use them as persistent financial channels. Value is cycled through, layered, aggregated, and extracted incrementally. It's not the dramatic wire transfer that AML frameworks were originally designed to catch. It's quiet, repetitive, and designed to blend into the noise of legitimate activity. Consider how this works in practice. A criminal deposits funds across multiple accounts on an illegal platform. Those funds are wagered, often on low risk, near certain outcomes in peer-to-peer or pool-based betting structures. Some losses are absorbed as the cost of cleaning money. The remainder is withdrawn as quote-unquote winnings. The trail from deposit to withdrawal passes through multiple jurisdictions, multiple currencies, and multiple intermediary entities. At the end, the money has a plausible story. It was won gambling. Gambling losses, unlike most financial transactions, require no explanation. That is the design feature criminals are exploiting.
We do need stronger national provincial coordination. Last year, when the National Gambling Policy Council, and that's the different MECs with the national minister, when we met, that was the first time the National Gambling Policy Council sat in like 11 years. 11 years. It can't be that way. It's if you want to move faster than the industry, then you need to act with urgency, with that fire. And what we've seen also is because of the rise of online sports betting, because of the rise of online gambling, we've gotten an increased amount of disputes. So the cost of compliance is increasing because we're unable to keep up with the amount of disputes we're getting, and it's a symptom of the increase in the industry. And as a province, we have increased our funding for our board for operations and making sure that capacity and being able to to reduce the time it takes for compliance to really deal with all the disputes. And the disputes are becoming much more complex as well. Sometimes we even get complaints about operators in other provinces that we then have to refer to other provinces, or sometimes you have to work with a different country in a particular matter, if it's a complex matter. So we really have to ask ourselves, okay, if this is where the industry is going, what are those specific things that we can do using AI, using technology to move the needle on seeing how money flows? And the interesting thing is, if we can get this right within the gambling sector, what prevents us from doing this for other sectors? So I think the conversation around illegal online gambling is also going to create a very interesting opening within the conversation in South Africa about illicit flow of money, just generally. Because once you start clamping down on one sector, it doesn't mean people are going to stop being criminals.
Yeah.
It might move the illicit money to a different sector. Or, how do they say, is if you make something foolproof, then you need to become a better fool. So as criminals might become more innovative, more clever. So we need to work with SARS, we need to work with Interpol, we need to work with Google, we need to work with the national board, we need to work with different countries and with SAPs, and making sure that we not only clamp down on people's want to engage in this illegal part of the industry, but that we're also cognizant that someone's not going to necessarily stop being a criminal if we are able to clamp down on it in the gambling industry.
There's also the human cost, and it compounds the financial one in ways that often surface too late for intervention. A recent survey by Better Bets found that 70% of South African gamblers said they gambled to supplement their income rather than for entertainment. Nearly half said they were hoping to cover rising cost of living expenses, school fees, rent, groceries. In a country with a 32% unemployment rate and youth unemployment above 45%, that context matters. People are not gambling recklessly, they are gambling desperately. Problem gambling sits around 1.5% of the adult population, which sounds small until you convert it to a head count. Hundreds of thousands of South Africans in active crisis. Debt counselors report gambling as a recurring factor in asset repossession, pension withdrawal, and informal loan dependency. By the time these cases become visible, the financial damage is already compounded and recovery is complex.
And I learned in those days that you go in there, have a bit of a target. If I make that, I'm happy. If I make a bit more, I can carry on playing because I'm not using my money now. I've already made my profit. Walk away. Do they? No. We had a guy from Cape Town who used to play at Marula Sun when I was there. Had the most remarkable run. He won 4 or 5 million rand, which was a hell of a lot of money. Again, mid-80s. Because he used to play a lot of numbers to the absolute maximum, so big money. Over a week he won that money. Do you think he bought a house with it or did something useful? No. Kept coming back, and the management was starting to get a little bit, is there something going on here? And obviously you're watching him and it's genuine, totally genuine. You can't really rig a roulette game, really. And over the next couple of weeks, gone, and now he's into 2-3 million of his own. And you think, man, stop.
We've covered quite a bit, but what's missing is this connection. The social harm and the financial crime risk are not separate problems. They are the same problem at different scales. A user who's chasing losses, redepositing rapidly, and normalizing bad outcomes is exhibiting behavioral signals that also describe a laundering-friendly account. High frequency, predictable patterns, and low scrutiny. Illegal platforms thrive on this overlap. It stabilizes their revenue, and it sustains their laundering infrastructure.
We need to legalize online gambling. It's like people who smoke, or if you're drinking alcohol, or, God forbid you do drugs. It's telling someone no is not going to stop them from doing it. And that's just how life works. It's just, for those behavioral economists out there, telling someone no doesn't change. And I always I always make this analogy about lawyers and politicians and engineers. Because if you're in a room with 4 doors and you want people just to go through the one door, just that one door, a lawyer is going to legislate you're not allowed to go through the other 3 doors. You're only allowed to go through this one door. A politician is going to try and convince you that, oh my gosh, it's morally imperative that we only go through this one door. But you know what the engineer is going to do? It's going to bolt up the other 3 doors so that you can only go through the one door. So we need to ask ourselves, what are those things that we can do in order to make sure that we really bring people into the legal fold?
So, what does an adequate response look like? The reports that inform this episode, NGB research, parliamentary debates, the Amabungane investigation, MoneyWeb's reporting on illegal operators converge on a few non-negotiable shifts. First, enforcement cannot remain anchored to physical location. The current framework was built for premises. The market operates across platforms, devices, jurisdictions, and intermediary chains. If a platform is extracting money from South African consumers and causing harm on South African soil, regulatory authorities should follow that economic effect, regardless of where the servers sit. This is not a novel legal concept. It's how consumer protection law already works in most jurisdictions. The principle needs to be applied consistently to gambling. Second, real-time monitoring must replace sequential oversight. The National Gambling Board has acknowledged that enforcement tools were designed for a physical gambling error. Investigations take months. Illegal operators can launch, scale, and abandon a platform in weeks. The detection gap is not a resource problem, it's a design problem. Visibility needs to be built into the transaction layer and not layered on afterwards. That means machine-readable transaction data, automated pattern recognition, and alert thresholds calibrated to digital betting behavior, not to cash-based casino transactions from 15 years ago. Third, payment infrastructure needs to be treated as an active risk point and not a neutral intermediary. The Amabungane reporting makes clear that illegal gambling ecosystems do not function without payment processors or merchant account providers and wallet infrastructure. Banks and PSPs that process payments to illegal gambling platforms, whether knowingly or not, face regulatory exposure, saw obligations, and reputational consequences. The claim of neutrality is not a defense when the typologies are documented and the patterns are detectable. FATF guidance is explicit that financial institutions cannot outsource the AML obligations to the licensing status of their clients. If the underlying activity is illegal gambling, the payment processor is part of the flow.
There's also a role for the banking industry to play and for the payments associations to play to make sure that illicit funds aren't moving through your platforms, and to make sure that there's due diligence and making sure that as much as the industry is using technology to grow and to maybe do things they're not supposed to be doing, we also have a lever that is technology. And how can we, with the payments associations, with the banking industries, use those levers, those technological levers, those automation levers, those AI levers, in order to make sure that we are able to track where money is flowing to.
Fourth, behavioral analytics need to be integrated into AML frameworks and not kept separate as consumer protection tools. Problem gambling indicators, escalating frequency, rapid redepositing, chasing losses are not just social harm signals. They predict money flow patterns that criminals rely on. Treating them as separate domains means the earliest warnings never reach the people who could act on them. A compliance officer who can see that a customer is exhibiting classic problem gambling behavior is also looking at an account that is high risk from a financial crime perspective. These two observations belong in the same file. Fifth, shared visibility across institutions is a minimum condition for effective oversight. At the moment, banks see payments but not bets. Gambling regulators see licenses but not funds. Communications authorities see advertising but not settlement. Law enforcement see fragments after harm has occurred. That fragmentation is not incidental. It distributes accountability so thinly that no one is accountable for the full life cycle of a transaction. The solution is not more regulation of each silo. It's coordination infrastructure that allows anomalous signals in one part of the system to be visible to actors in another.
I do think that there's also a larger conversation for the finance sector to have in terms of how we monitor and do oversight over the movement of money. And if we can get this right in this sector with the banks, with the payments association, surely there are ways that we can then use those type of systems in other sectors to automatically start detecting some of these things.
South Africa is not unique in confronting this. Finland has begun enforcing payment blocks to operators not licensed under local law. Brazil has moved to restrict card payments for unlicensed online gambling. The UK's Gambling Commission has expanded its powers to require banks to identify and block payments to unlicensed offshore operators. These are not radical interventions, they are basic plumbing changes that treat the payment layer as a meaningful point of control. They're also measurable. Finland saw a 20% reduction in transactions to unlicensed platforms within 12 months of implementing payment blocking. The lever works. South Africa's not pulled it yet. What smarter control actually looks like in practice is not theoretical. It is a compliance officer at a South African bank whose transaction monitoring system flags the customer not because a single bet exceeded the threshold, but because the aggregate pattern of deposits, frequency, and merchant routing matches a known illegal gambling typology. It's a payment service provider that treats misclassified merchant category codes as a first-order risk signal rather than an administrative anomaly. It's a gambling regulator and a financial intelligence unit sharing data in real time so that a problem identified as unlicensed at 9 a.m. cannot process 1,000 transactions by noon. None of this requires new legislation. It just requires the institutions that already hold the data to treat it as a shared resource rather than siloed obligation. The institutions best positioned to intervene are the ones closest to the transaction: banks, payment services providers, and compliance team with real-time visibility into money flows. The question for those institutions is whether they are treating this as a gambling problem that belongs to the gambling regulator or a financial crime problem that belongs to them. That's where this episode leaves us. Not with a call for heavier regulation in the abstract, but with a precise observation about where the leverage actually sits and who has the tools to use it.